What up, Hyperchange? Welcome to another episode. Today we're talking about Tesla stock hitting 2,000, doing a special sort of podcast episode, taking your tweets, a little bit different styles. I have no plan for this episode. I'm just going to ramble for an hour about what I think about Tesla stock. Hyperchange advisor, we got Julian over here. He's going to be playing devil's advocate, asking some tougher questions about my moonshots. So let's just get into it. I mean, I think as a Tesla bull, rewind a year ago, we're at $200 a share. Nobody believes in the company. Still a overwhelming consensus on Wall Street that Tesla's going bankrupt and that every other car company is about to crush them. Fast forward now, Tesla's the only car company growing. The stock price, despite this global pandemic and despite record unemployment in the United States, has 10x'd almost in the past year. We're at $400 billion market cap, 5-to-1 split. Pretty hard to rationalize all of this. And I guess the question I've been getting a lot, and what I really wanted to boil down in this podcast is, what is the perspective here is from a long-term investor, someone who's owned the stock for years, who plans to own? Maybe you can check my Twitter bio, HODL till 2 trill gang. I've upped my long-term price target from 1 trill. But how do you think about investing in a stock like this where it's gone up so much? It seems detached from some of the near-term fundamentals. All of my friends and people on Wall Street are like, bro, it's such a bubble. The valuation's ridiculous. Does this make any sense? Well, in this episode, we're going to try and unpack, all of that and really try and understand what is going on with Tesla. How much is this really worth? Because at the end of the day, the company can be great and they can be changing the world, but price matters. If Tesla was valued at $10 trillion today, would I be a shareholder? I don't know.
I think it might be interesting to just dissect very high level, like near term, mid-term, long-term opportunities. And I know you don't like to get into price action, but I think it's interesting to discuss.
Yeah, so I think that the greatest reason behind Tesla stock's rise here is not the S&P 500. It's not, some crazy euphoric bubble. It's not the Fed printing money. It's that Tesla in the past year went from burning a ton of capital, needing to rely on the capital markets, needing to raise capital to fund its business model, to wait, now all of a sudden we can fund everything ourselves. We have the cash flow, we have the profits. It's not just one quarter, it's 4 quarters in a row of GAAP profitability despite a global pandemic. And those are just numbers that nobody can deny. And I think that's just sort of a structural change in Tesla of going from, let's call it teenager to grown up, and actually getting, being at the table with these other tech companies and producing huge cash flow, being in the driver's seat of their own destiny, funding their own future. And the second you realize and strategize that 2018 Tesla could get the Model 3 to roll off the line profitably, now all of a sudden you're thinking, well, Model Y is about to be even more profitable, ramp even quicker. What about Cybertruck, Tesla Semi? That sort of net present value of potential cash flows of each adjacent vertical to disrupt went way up, because now the likelihood of success of disrupting each of those verticals goes way up the second you prove that Model 3 could be profitable. And so I think there was this key structural sort of cash flow inflection and profitability inflection for the business, and that is what basically got all of the financial world involved.
But there is something to be said about stock split mania. See Apple and Tesla announcing stock splits. Apple's up huge, closing in on 500, added a couple $100 billion in market cap. Tesla's up 50% since the announcement.
Yeah.
Was that a trigger?
So I think that's almost, there's more, I think taking a step back, there's this euphoria of all right, so, 50 million or record people are unemployed, but why is the stock market back at all-time highs? I think people are having a really tough time rationalizing that disconnect that's going on. And they're like, there's no way the stock market could be at all-time highs if this many people are laid off and this part of the economy is struggling so hard. Well, I think when people describe what happened in coronavirus and they talk about this from a historical perspective, it's that rapid, increase, acceleration of the digitization of society that was already underway. Video conferencing tools like Zoom, massive increase in engagement. Of course, every single social network, every single digital communication method, all of these software companies have become even more prevalent, even more important. We've sort of accelerated this decade-long inching along transition. Look at online grocery, was inching along, all of a sudden has, totally fast forwarded overnight. Zoom goes from a tiny portion of meetings to all the meetings overnight. So I think there's in many ways the tech companies hitting all-time highs and reaching higher valuations, to me, makes perfect sense. And through the lens of these companies' products and services have never been more important to society, have never seen more engagement, have never been used more for more important things. It was always oh, it's an important meeting. We got to meet in person. We got to sign this in person. Now all of that's out the window. And so I think there's this pocket of these technology companies, and look at their earnings. Tesla's still profitable. Apple's still crushing it. So is Facebook. I think Amazon, record profits, record revenue, accelerating growth. There's truly, an underlying fundamental thesis for a lot of these technology companies' valuation hitting all-time highs. In my opinion, is their sector of the economy is crushing it. And as hard as it is to wrap your head around the fact that 20 or 30 million people that are now unemployed, not spending money in the economy, wouldn't be enough of a drag to impact these tech companies' earnings and valuation, like that just is the reality. Like these tech companies are going to hit 2 trillion regardless of whether those 30 million people are spending in the economy or not. And that's why I think there's just a huge divergence. And some businesses are clear winners and are stronger than ever, and some are really struggling. And even beyond that, to your point of like the stock split, the mania, I view this as sort of a techflation going on in our economy of you only want to own good assets. What do you want to own? The dollar? I think everybody's had this moment of like, did the US government really print $1,200 and give it to me? Like that's never happened in my life. Like, you know what I mean? And all of a sudden we're like, okay, the government's in charge. They can print money whenever they want. There's nothing backing it. Like I think there's a really, I was listening to Jason Calacanis, like this dead asset theory. Like, are you in bonds? Are you in treasuries? Are you in mutual funds and index funds that you don't care about? And now you're rethinking about, or cash, fiat, and you're rethinking about where is my wealth stored? What is the US dollar? Are they really just printing more whenever they feel like it? And I think there's this sort of been awakening of people realizing what their assets are in. And when you think about how uncertain the world is, where is certainty? Where is the future inevitably headed? Technology companies. And I think there's more and more realization that equity in these technology companies, for lack of a better term, basically just ownership in these technologies that are the future of society is where you want to have your assets. Tesla is a technology company that's changing energy, transportation. No matter whether we're using the US dollar or Bitcoin as a currency, this is going to be worth a huge amount of money. Same with Zoom. That piece of technology that allows everyone in the world to connect, collaborate, and work together is tremendously valuable no matter what currency we use. So I think to me, there's been a techflation of, maybe inflation overall in the economy. We're not seeing it pick up, but the reality is people are flocking to these high quality assets, and there's just a very, very scarce amount of them. And I think Tesla's one of them, in the automotive world. And like tying it back to what we said originally, Tesla as an asset is way doper when they're pumping out $5 billion a year in cash flow versus burning $5 billion a year in cash flow. And despite the world crumbling, that is the inflection point in cash flow that has occurred.
Yeah, I think we're seeing like category leaders in different industries, like the Apple, like the Amazon, like the Tesla. People are starting to pay a premium for that on the market.
And like Shopify, like, we've been investing for 10 or 12 years following stocks. Like I've never seen Shopify. What are they worth? Like 100 something billion with like 1.5 billion in revenue, like 50 to 100 times revenue. I know they're accelerating growth. I know they're getting more profitable, but they're kind of basically a break-even business at 50 times revenue, growing 60, 70, 80%. I mean, this is like I've never ever heard of this. It just boggles the mind. Tesla, an automotive company trading at 15 times revenue. I mean, this is like, automotive companies trade at 0.5 times revenue historically. But then the flip side of that, we're not even really talking about earnings multiples because they're so ridiculous. But the flip side of that is, what is interest rate? Interest rates are zero around the world, basically, flat or negative. And so there's the kind of inverse balance of the yield curve, which I think about a lot of like, well, the 10-year treasury is yielding, 5%, let's call it. That's a good comparable benchmark to the S&P's, price earnings ratio. A 20 PE ratio is a 5% earnings yield. So you can start to benchmark that 5% earnings yield of the S&P with that 10-year treasury of 5%. But the problem is the 10-year treasury now is like 0 or whatever, 1 or 2%. And so if the 10-year treasury is at 2%, that's a 1 out of 50 yield, or 50 years to get your money back, basically. So that'd be a 50 times price earnings ratio is mathematically justified for the S&P 500 because there's no alternative. Tina, that's what they say. The lingo, there is no alternative. What do you want to own? Fiat, paper currency, or equity in technology companies that have products and services that we need to function. Like Amazon, it's crazy to me how Amazon is like, almost should be like sanctioned by the government as like a critical piece of our society infrastructure. Like, I don't even know, if we didn't have these internet tech companies saving the world right now, like everything would totally grind to a halt. The amount of the economy that's moved to Amazon, how important they are for this plumbing of how stuff gets around is incredible. And you think about being able to, with your capital, own the asset that moves everything around in the economy that's so structurally important, governments would probably bail it out versus something else. Scrolling back for Tesla history lesson, like, Tesla was at $30 a share in 2012. And there's, they had this other sort of going, now I say they're teenager to grown up. It was toddler to teenager. when the Model S went from 1,000 cars a year made by hand to like 20,000 cars a year, starting to get profitable, starting to show some good economics, starting to crush and outsell the competition. And Tesla, the second that that Model S worked, the stock price went from $30 a share to 180 in like a matter of 6 months. Like it was a total re-rating, massive inflection point in the company. And then you had a 5 or like 6 year, 7 year period where the stock did nothing. You know, it was at 180 or $200 last year. And it literally had to backfill into that valuation. Overnight, the stock market gave Tesla from a $3 billion valuation to a $40 billion valuation. And the company was still doing 3 or 4 billion in revenue. So it was, it took them years, and then now they finally hit 25 billion in revenue. The company was still trading at 40 billion, and everyone was like, "Wait, look how fast Tesla scaled. It's not going to be long before they hit 100 billion." So now we've seen the valuation have that another massive leg up to that 3 or 400 billion range. And frankly, I do think that's pricing in, Big Gigafactory Berlin getting online, Texas, Shanghai ramping, Fremont continuing to ramp. Like this is pricing in, I would argue at least 50 million in battery electric vehicle revenue, which is probably a double from where we're at today. So, I think the stock market goes in cycles. It's really hard to predict when the stock market will price in your thesis of the company. I was pounding the table for 3 years thinking Tesla was undervalued, pouring every single dollar from this YouTube channel into buying Tesla stock, being like, when is the market going to get it? This is a no-brainer. And then all of a sudden, in a 6-month period, the entire market decides to realize that and give Tesla all the credit for years worth of work. So I guess the point I'm making here is like really the incremental, intrinsic value of Tesla as an asset is just stepping up every single day. Every day that goes by, more work gets done by the group of employees. The value of whatever Tesla is grows and goes up. But the stock price is wildly swinging, going way below that intrinsic value that goes up and way above. And frankly, I think the intrinsic value was doing this for years. We were way lower than it, and it shot way up. It's way overcorrecting here. But now the question is it too overcorrecting? Why am I holding on to every single Tesla share I have and not selling? Because I think this is actually easily $2 trillion company in maybe 5 to 7 years. And I still think that's a pretty good, 15 to 20% CAGR on your capital or whatever from this valuation. So I do think, I was talking to one of my mentors recently, and he was like, short-term Tesla valuation makes no sense. Medium-term Tesla valuation makes no sense. But long-term, Tesla valuation still makes a lot of sense at these levels if you believe in, let's call it the autonomy thesis. Maybe that's a good time to bring that up.
One more point before the autonomy thesis. I think it's interesting, like the Tesla Twitter sphere or community keeps focusing on all of these like near-term catalysts, Battery Day, Giga Shanghai Phase 3 or 2, whatever it is, Giga Berlin, Austin, Cybertruck. There's a ton of near-term catalysts, but then you have to go back and say, well, the valuation is also 10x in the last year.
Yeah. And I remember that was at Model 3 when the stock was at $250 right before Model 3. And I was thinking like, okay, like, the market is assuming that Tesla will instantly ramp the Model 3 and be profitable, and like kind of just giving them the benefit of the doubt of like a year of execution, which is exactly where it feels like we're at now. Is the market is giving Tesla this benefit of the doubt of like they saw Tesla do Shanghai, and this is why the stock market is kind of like, it's kind of like this person who gets way too pumped up and like frenetic and like, just follows the trend way too hard. Like Tesla has a little bit of trouble on the Model 3 ramp. Like Wall Street's like, oh my God, Tesla's going to crumble. Nothing's ever going to work. They can never do a production line. Now we've seen them do successful with Shanghai, and Wall Street gets overly exuberant on the other end of like, oh my God, everything that Tesla does is way ahead of schedule, happens instantly, has huge profit margins. They grow like crazy. It's that pendulum of expectations, as ridiculous as it was at 180 or 200 last year, I would say is getting, I don't want to say it's that ridiculous on the other end, but just because I think the macro, like if this was Tesla in isolation, I'd be like, whoa. But, we're seeing companies like Nikola that literally have nothing that are worth 25 billion. Like, so, there is no alternative. E equals MC squared. Everything's relative. So the valuation of Tesla, as much as I hate comparable companies, and Tesla shouldn't be valued the same at a price sales multiple of 0.5 like Ford or GM, because they have very different business model from Ford or GM, like I still think you have to put into perspective the fact that there's a ton of capital sloshing around. There's only a handful of companies that inevitably look like they're profiting off of this, future that we're all heading towards. And Tesla is in that bucket now.
I want to kind of follow up on the last question because I think it's important to kind of share with the community. Really kind of being a long-term investor versus a short-term. I think we all kind of get lost in the sauce a little bit. Look at your E-Trade, look at your Robinhood, like Tesla's going up 10, 20% a week for the last year. Yeah, it feels like, at least. And I think like we got all these comments going on about like, oh, S&P inclusion, about to have another 30, 40, 50 billion versus of volume coming into the stock.
Yeah. I think you got to put on your hat of like, are you a trader or are you an investor? And I'm the super long-term investor. And I think it's almost a detriment that you can check the Tesla stock price every day. Like it's a distraction. I almost never check the Tesla stock price until Julian wakes me up and texts me and yells at me about it. So, and it's hard to ignore with all of you on Twitter, but like you should have your own fundamental valuation of Tesla. Like here's the numbers I crunch. Here's the model I have. Here's how many cars I think they're going to sell in 10 years. Here's how big I think they're going to be. Like I like to invest in companies because I want to think like an owner. Like I want to be an owner of this business for the long term. And investing in companies because they're going to build an amazing future usually means you have to wait years for them to actually build that future to get a good return on your investment. And so I think we're in a little bit of a weird place right now because it's like, okay, if Tesla stock goes up steadily, like this is great, but like maybe, my valuation for Tesla in 2030 was they're going to be a $500 billion company. So if they're already worth 400 billion, maybe it's time to start taking chips off the table. But my long-term trajectory truly is that I think this is a multi-trillion-dollar opportunity and there's still a lot of good upside. And I try really not to get caught up and sort of like, be smarter than the market of like, oh, I think the market is pricing in too high of a near-term price sales ratio or too high of a near-term price EBIT ratio. So I'm going to take all my chips off the table and wait for the market to re-rationalize. Then I'm going to buy in cheaper when really you're like, you already know that this is a good buy at this price. And so you would just, Yeah. Does that make sense? Like, I'm not going to try and be smart and like Peter Lynch is saying, like Warren Buffett, Peter Lynch, you can never predict what the macro is going to do. You can never predict that COVID-19 is going to happen in the world. Who predicted that 2019 was going to happen or 2020 was going to happen? The whole world was going to shut down. I don't know, but buying the company Tesla, if you actually did your homework, you realize Tesla was in a way more financially stable position, way more leaner, way more able to navigate, had a much better product lineup to adapt. And what has happened when things hit the fan, those great companies, surged in value and did amazing, and those horrible assets crumbled in value. And so I think at the end of the day, like you can get caught up in the stock price and the trading, but you always have to remember there's a company, there's a business behind every single stock. And like this isn't about me going to the casino and gambling and trading and trying to be smart and trying to make money. This is about me being like, where are my savings allocated? I want them to be in this company, Tesla. I'm holding on to them for decades. This is a super long-term story. I go on the street, every single car is still burning fossil fuels. Every single house doesn't have solar panels, or 99.9% of them. And so I still think we're very, very in the early innings. And if you believe Tesla's business can go 10x again from 25 billion last year to 250 billion, then maybe we got $1 trillion valuation on our hands. And so now we can dive into how fast does that happen? And like I said, when does Tesla's core business value start to rationalize a $400 billion valuation in my head?
Another like hard example of the whole trading thing is I feel like there are some people who that crazy day when Tesla like peaked out at 1770, you take some chips off the table and you're like, hey, I'm gonna scoop some shares at 1,000, no problem. And then all of a sudden we're above that point. So I think it's like really easy to.
You're trying to grab pennies in front of a steamroller, and you're getting lost in the sauce of like, what were you getting involved for Tesla for? You were investing in this because it was a great company. You weren't buying this because you were thinking you were going to be a smart ass and trade it better than Wall Street. That's not why you got involved in this game. You got involved in this game because this was an amazing company you wanted to be a part of for the next decade. That's my take on this. And if Tesla, somebody asked me like, when do you think Tesla could be the most valuable company in the world? I think that was one of those tweets. And it's like, I don't know if they will be the most valuable company in the world. I think Apple and Amazon and Google are setting a pretty high bar for how fast the biggest company in the world is expanding. But, one of my favorite analogies is like, we're 8 billion, monkeys on this rock, and we all need to get around, and we're not. And I think the opportunity for us to move around is a multi-trillion-dollar opportunity. Why did Saudi Aramco be worth $2 trillion, the largest IPO ever, this, state-owned oil company of Saudi Arabia? Because we're all buying these cars that are energy consumption devices, and the biggest maybe ROI of the business case of that is not selling the energy consumption device, it's selling the energy those devices are consuming. And so that's why Nikola is hyping up how they're going to get $1 million in revenue from every truck, because they're selling the energy. On some level, they're literally just piggybacking onto what Tesla is actually doing, which is building this flywheel and trifecta of businesses that are, cars, trucks. Those are products that consume energy, solar panels, solar roofs, products that produce energy, the batteries store energy. We've got this new trifecta of how energy works for 8 billion monkeys on this rock, and this is a multi-trillion-dollar problem they're solving. I think they're the first mover here. That's why we're all obsessed with Battery Day. What's the technology that really allows them to scale that? And when I say like 8 billion monkeys on a rock trying to move around and get places, like that's how I think about the TAM. I hate like, this is the market size by 2024. Here's a report done by 6 MBAs who've never run a company and here's how big they think the industry is going to be in 10 years. Like, that's all BS. I think you have to work back at it from first principles. How many humans are there who have a certain amount of disposable income and need to get from point A to B in different cities constantly? Like, look at Uber, look at Lyft. All of these businesses are losing money. They're not sustainable. They're not that safe. They have humans driving these devices, not robots, not AI. Like, this is just scratching the surface of showing the future of the transportation industry. And I think this is getting to one of Julian's awesome theories about Tesla and why I think Wall Street is having such a hard time valuing this is, like Elon Musk said, the largest increase in asset value in human history is the second they flip the switch on the over-the-air update and every Tesla on the road can drive itself. Like, this is going to be... so let's talk about this. How do you think Wall Street is pricing in that call option?
I think about it in a fairly basic perspective, like the Tesla core business operations. Because I've been, don't get me wrong, I've been sitting here trying to figure out how to rationalize a 300 billion valuation. 2 weeks later, 380, 400 billion valuation. Like, by next week, it could be a 450 valuation.
Right? Like, I told all my friends it's a joke, like, a month ago. Like, if it's 2,000, like, then you can call me about whether I'm selling. And it's like, every week, and it's like, I'm like, nah, like, 3,000, bro. Like,
and these are very rough numbers, but I'm basically like, okay, Tesla's core business operations today, I think a good, decent, fair value for that is about 150 billion.
And you're talking about BEV, like battery electric vehicles without autonomy, just selling electric cars.
Yeah, just their car business, their solar business, their energy business.
Okay.
I think you can pay 150B for that. Now, there's probably a bunch of people who are like, oh, 150B for just that is crazy, but we have to remember that it's like, some of these other auto companies, they have a ton of debt layered in. So, their equity is worthless because of all this debt they've got. But I don't know, if you're a disruptor in an industry, have a super technology, you can attract the best engineers in the world, you're paying a premium for that. Totally. And I'm fine paying 150 for, that core Tesla business. So, how have I been trying to rationalize, the 380 to 400 billion market cap? It's really about this weird call option on autonomy. How much is autonomy worth first to market? Regardless of whether or not you can, you're fully operating, a robo-taxi fleet, like how much is that technology worth? And I think could be worth upwards of, $1 trillion. And this is something that, let's say in a best case scenario, they decide to pull the lever, the 4D rewrite goes well, videos start releasing on YouTube of, the great Tesla owners beta testing this technology.
Yeah.
Cars are taking right turns, they're going around roundabouts, they're doing unprotected left turns. This is all stuff that could happen in the next year.
Yeah,
like,
and then
that's
you don't
not
have to be a rocket scientist to be like, we're going autonomous, bro. Yeah. Like, I'm like, when you have 1,000 people posting videos of like me to work, I didn't touch the car once, like, and I think that's already kind of happening. To your point, is like people like this whole theory of like, a million robo-taxis, every journalist making fun of Elon Musk is now turned into like, wait, like, like journalists can say this is super dumb or not, but like me and my friends are in the Tesla and it's driving itself and it just updated and got better. And I know next weekend I'm inviting my homies over to see how much better it got. Like, people are going to start putting these pieces together on that, like what you said, this like call option of like, well, if Tesla does hit autonomy and they turn on this spigot that could potentially be generating like billions of dollars in profit out of the blue instantly, how do we and like, we're trying to wrap our heads around this. Think about Wall Street. This is like technology. This is like the biggest, I would call it the biggest artificial intelligence project that humans have ever attempted. Is to, we're slowly letting up more and more facets of our society to give up trust and decision making to artificial intelligence algorithms. What are you watching on YouTube? Half of you probably got recommended this by the YouTube AI. You know what I mean? That's a decision of what you're going to watch today. Soon your car, you're not going to make decisions of how it turns and how it drives. We're going to pass that off to the AI. It's one of the most complicated, like, stories of human evolution today and how we're using technology is, are these cars going to drive themselves? Are we going to trust software to do that? And so, just in like a human level, this is such a big thing to wrap your head around, let alone the like Wall Street level of like, let's put out a spreadsheet of how many people are going to adopt this game-changing technology, how fast, what are the profit margins. They just are, they're bewildered. They have no idea what they're doing.
Yeah. I think it's such a powerful technology that it's one of those few technologies that's like, if it's figured out, like monetization is going to come afterwards and like cash flows will be there. Where this is all going is like from a very basic perspective, it's like, let's say very rough numbers, autonomy in itself is like a $1 trillion opportunity. The way that I think about it personally is I'm paying at let's call it at 400 billion, I'm paying, this 15 to 20% expected probability that they figure it out and are first to market.
Right? And so that's the interesting part.
And so it's like, what is the probability Elon figures it out? Is it 20%? Is it 50? Is it 10? Is it 5? That's what the market's here to decide.
And the stock it's not going to be at 150 billion and they turn on the switch and it's worth 2 trillion the next day. This is going to bleed into the stock price. Yeah. So now the question is how much bleeding into the stock price is due to this autonomy, robotaxi switch turning on, and how accurate is that pricing relative to the reality of the probabilities. And what's interesting about the reality of the probabilities is every single update, whether it's Dojo, what Julian's talking about, this big new rewrite that Elon Musk is hyping up, every day that goes by, we get closer to that. So, this is that theoretical time back to like Tesla's this crazy value. We don't know what it's worth. It's going up every day. Well, on some level, every single day that technology and software gets better and that the expected probability of Tesla's robotaxi network actually existing going up, then Tesla's equity, the math behind Tesla's equity should, in theory, have it go up. And it's just such a weird thing to fathom. And one of my favorite, like, sort of ideas and terms behind this is this incremental gross margin appreciation, where it's not even just like us calculating it into the value of the company that's going to show up. It's actually the financials today are already showing the value and impact of this self-driving software, because Tesla pays or charges $8,000 for this FSD package, and they're going to keep raising the price of that on the way to getting to full self-driving. So I think this is what the market is sort of puzzle piecing together is we're not going to get the chance to have that aha moment. The aha moment is a super slow motion aha that has already started. You know what I mean? Yeah. And so the question is, should they only be pricing in 100 billion of that call option, and is the stock worth 1,200, or should it be 300 billion of that call option and the stock's 3,200? I can't tell you that fair value. Like, I don't even have enough, but
It's almost like a life science company doing drug development. Like, you're going through the FDA trials, and it's like, okay, the FDA permits you to get to the next trial. All of a sudden, your expected probability that you can bring this drug to market skyrockets. And you'll see these stocks release their press release for the FDA, and it'll go up 20, 50, 100% in a day. And, it's a little bit bizarre, but it's kind of like that in a different way, right? You're releasing these software updates very regularly. Owners are starting to post the progress, the videos. There's more data coming to the market about this probability of success reaching autonomy. And I don't know. That's why it's impossible to predict where the stock price is going to be, in the near term, midterm.
And if I was like a data guy trying to crunch the numbers and get really granular about when is Tesla's AI considered safer than a human driver, I would be looking at their safety reports. Like, Tesla puts out their safety reports every quarter. Tesla's quietly already building the scientific case for why their AI is smarter than humans for regulators to approve. Like, this is already, and in theory, like you're saying, like that is the version of the FDA data. Like, every quarter where Tesla says our cars got 30% safer, that almost is the incremental data release. And this is like one of my biggest pet peeves is like the TechCrunch article that came out like this week or last week, like Tesla stock up 10% for no reason at all. Like, no one knows what's happening. And it's like, I feel like I'm like, bro, this is why I created Hyperchange, because the level of analysis is like so bad. Like I have some friends and they'll call me up, spend the first 5 minutes of the phone call being like, yeah, Tesla stock going up. Like, congrats, Gally, but like, right, so overvalued and ridiculous. And then the next 5 minutes of the call telling me about how everyone they know in their life is buying a Tesla. And they couldn't put the two together. That it was like, bro, like, you know what I mean? Like everything in the world is changing from vehicle wise, and it's all going electric. It's one company, it's Tesla, and they're going to change the world. Like this isn't, it's like one or two sentences for you to understand this. And so this, if I had to explain to somebody why is Tesla actually worth 400 billion, I think it makes total sense when you understand everything. So we've had all these dinosaurs like Ford, GM. Ford's biggest innovation for how they build the car, Model T, production line 100 years ago. That one breakthrough in innovation has been just incrementally built upon by every single car company around the world. Like innovator's dilemma. People get complacent when there's no disruption. The hardest industries to break in are going to be waited till disrupted till the longest last possible moment. Use a Jimmy Cliff quote here. The harder they come, the harder they fall. The harder they wait, the harder they're going to get crushed. That is exactly what's happened to autos. They waited till the last second. Tesla was a joke. Every single year, Tesla was a joke. Hybrids were a joke. We're not taking this seriously. Who gives a shit about climate change? We're going to, figure out what consumers want based on what our Harvard, McKinsey's MBA are going to tell us. And this went on for decades and decades. And the thought process and the culture and the ideology of product design and everything and the entire auto industry got so away from the consumer that it was just this perfect moment of like, this is the hardest industry to disrupt. That's why no one's done it. They're so in their own bubble. We have all these old executives only getting paid on salaries. Everybody's getting rich on the status quo. Nobody's getting rich on disruption. So that has gone on for so long. And then you finally have lithium ion batteries getting better with the cell phone and smartphone. Tesla sprinting in 2008 to develop this technology and bring it to market, and nobody giving a shit until 2018. 10 years of sprinting. Not only do we have somebody sprinting for 10 years, but we have the smartest engineer in the world, Elon Musk, doing it with JB Straubel, structuring it as a venture-backed company where they're able to attract and retain the smartest talent in the world, massive competitive advantage, and they're doing it at this time when like 6 technology trends are converging at once. You have the batteries getting cheaper. You have software eating the world, controlling everything. You have manufacturing being done by robotics. You have things being sold online. You have education, happening online. You don't need to rely on, distributions, third-party legacy infrastructure, any of that stuff. And so Tesla runs and disrupts everybody. Everybody is just flat-footed, stubbornly saying Tesla will fail because everybody else has failed for 10 years. And then when Tesla finally succeeds in 2018 and posts that profit, that is when every single automaker pivoted, had to switch. The Model 3 is the best-selling car in the industry. And the problem is everybody assuming that these companies can compete with Tesla, just like, I don't know if this rant is making sense, but my point kind of to all of this is just this is a massive industry with hundreds of billions of dollars of revenue that had no innovation, and it took so long, and Tesla's finally cracked the code, and we haven't seen them like really run with this technology and product, market fit that they have into every single category, but they've already proven it once, and it's going to take 5 or 10 years for somebody else to develop this vertically integrated, tech stack that Tesla has and compete. And so Tesla now is in this moment of almost inevitable profitable expansion into every single product category in the vehicle industry, from sedan to crossover utility vehicle, the Model Y, into the pickup trucks with the Cybertruck, into the semi-truck with the Tesla Semi. I mean, this is inevitably going to happen. In my frank opinion, nobody has a shot in hell in competing because there's literally 10 years of work and billions of dollars of capital from the smartest people in the world going on this torpedo that is Tesla, and nobody else has even put in the work to build the launch pad for their torpedo that's going to try and take off. And this one's been shooting for 6 years straight. And so to me, the financials right now are just so lagging, so in the rear view mirror of what this technology that Tesla's developed that is totally going to be the propulsion technology of the 21st century. And to me, like Julian's saying, you have this very clear ramp of 25 billion out of Fremont. Now we have Shanghai, now we have Berlin, now we have Austin. This is a very easy mathematical, incremental just extrapolation to 100 billion in revenue in 3 to 4 years or whatever, and that's just BEVs. That's 25% margin. Let's assume, 10% of that goes to the bottom line. 10 billion in earnings is kind of happening pretty soon. And so I think the market is pricing in a lot of that right now, pretty much all of that. And look, we'll give Tesla 30 to 40 times its 2023 normalized BEV business earnings. That's kind of the way I'm looking at it. Maybe that's too high of a price, but you're layering in this autonomy thesis as well. So we have Tesla dominating how cars are. And then this software package they sell for $8,000, which they can soon sell for $100,000, just changes, it's like, It's like it's like Apple's been selling you this smartphone with this $5,000 software package every person in the world's going to buy, but nobody's been buying it yet. And Apple's already this most profitable company in the world. It's like, how could you even fathom how profitable they're going to be once they sell this software package? And so, is this making sense, Julian?
Yeah.
And so that's kind of where it's at to me. It's like Tesla, if you figured out what's happening, you've been watching it, you know that the game is over. That the referee blew the whistle. It's 45-0 on the scoreboard. And even though we're already at halftime and everybody's waiting to see who's going to win, if you've been watching the game, you fucking know it's a no-brainer. It's Tesla, and they're winning in every single vehicle category with this battery technology.
I also think it's like super important to understand like what is innovation. Some people might just look at Tesla as like, oh, they're being innovative because they're coming out with the BEV car. But really, if you look at like the first principles that Elon goes through to solve each of these problems, it's absurd. Like creating the battery supply chain team at Tesla. What other legacy auto manufacturer has that? Like building the octo valve to make the Model Y more efficient.
Yeah.
Experimenting, and granted this was one of their big failures when they were ramping up Model 3, was they tried to put too much robotics into manufacturing, but they're still going after that problem.
Yeah, and maybe they failed at what they set out to achieve, but did they build the most profitable electric vehicle manufacturing program in the world? Yes. And are they getting better? Yes.
Like, then you have, Model Y, where the rear piece is single casting. Like, these are innovations that Tesla's making and learning, and why they're really years and years and years ahead of the competition. Yeah, Toyota may be able to build the perfect, most efficient, Corolla or Camry or, Tacoma, whatever they're selling. But, Tesla's really attacking this is like, let's change every piece. The supply chain, how vertically integrated we are, the software we're making for the car, the chipset for hardware 3, now rumors saying hardware 4 is on the horizon.
Like, we're coming out with our own insurance company too. Like, I love that Elon Musk analogy of like, we're 12 startups in one. And that's what I also love about Tesla. And, okay, Shopify's worth 50 times sales. Like, I'm pretty sure Tesla had a higher profit margin than Shopify did last quarter. You know what I mean? People are on these weird holdups and like sort of misconceptions that Tesla's a super unprofitable business right now and that it sucks. But it's like, dude, I was looking at Tesla's first half of their income statement of this year. I was like, Q1 sucks for the auto industry. We had the global pandemic. Tesla still grew, and they had like a 1.2 billion incremental swing on operating income. Like, this is a behemoth, bro. Like, they're more profitable than all these software companies that are trading at 30 times sales. So, and this is before any of these innovations come out. And the other thing I also like, one of my favorite statistics when analyzing a company, very scientific, very thorough, lots of numbers, give a shit factor. How much does your CEO actually give a shit about your company, your products succeeding and changing the world? Elon Musk is up here. He takes $0 in salary, only gets paid in stock, and GM and Ford and everybody else in the entire auto industry is literally just getting rich on their salary. Like, their give a shit factor about the company, their will and chutzpah to change the world is 0. And this is just so simply the number one reason why all of them will fail and none of them will take the big risks needed to actually, change the whole automotive industry. And so I think there's this really weird sort of case study going on right now, probably the craziest case study in business ever, of like all the business and smart and people who get it realize that Tesla already won. And now it's just about, anybody's guess about how the financials fall into place. But from a technology perspective, I think it's really clear who won. And at the end of the day, it boils down to like Elon Musk, he is the difference to me, like setting the culture, setting the tone, engineering first principles, no bullshit. Like, every rule's made to be broken. We're just going to do things that are the best for the customer and nothing else matters. Like, that is just a mindset and a company culture that has ate every single industry, except it just hadn't eaten the auto industry. And so I really think this is like Apple of the automotive world. That's a saying that everybody says. I've been saying it for a decade now. And I feel like it's like, this is so true. Apple doesn't dominate and then reach the size of IBM. Apple dominates and then becomes 5 times as big as IBM ever was. So when you start to think about, Tesla dominating, becoming 5 times as big as the last tech company that dominated the world and changed everything, these new market cap Yeah, I guess that's like the crazy moonshot where we can like wrap this up and end it is like, I think this is too good to be true from a numbers basis of like how the financials were unfold, how nobody thought this would ever been possible for a car company, and it will be too good to be true, and it will break all those rules. And the other set of fundamental rules that it will break on the back of that is the valuations, the stock price, the multi trillions of dollars of market value that have never been created before by an automaker that now are. Tesla's, just like they break records in everything they do. I think when they go all the way as a company, they're going to be breaking records too. And like low key, we're not looking at 2 trill, we're looking at 10 trill in 2035. And, and that just is what it is.
Yeah, it's just a new era.
I feel like I'm already trying to get some lessons learned from this Tesla investment of like, how do we spot the next Elon Musk? What signs were there that this was going to work? Because I think that is the craziest part about Tesla. And I feel like almost like the saddest part to me about all of this is that I feel like, we got this special moment with Apple and Steve Jobs in the early 2000s and the iPhone and just watching this incredible case study change the world. And I feel like that's exactly what's going to happen with Tesla. And it's like, honestly, a part of me is sad that like, now we're in this chapter of Tesla inevitably killing it, growing, changing the world. But like, who's the next Elon Musk? Like I don't know if that's a topic for another podcast, but like, that's something I'm always scheming at. It's like, nobody is, I think the reality of the situation, why so many people have a hard time figuring out what this is because we really it all boils down to Elon and just how special he is as an entrepreneur. And truly, very simply, but really this is the huge difference of actually being an A+ business person with an A+ engineer. That is literally like, maybe Mark Zuckerberg, you could put in that category because he was also a coder and built Facebook. But that is truly the differentiation that Tesla has. And it's like, you can put it in all these boxes you want, but it's just like, we literally have one of the smartest humans in the world. And if you think about what humanity is, it's like, we're all connected with the internet. There's 8 billion of us. There's never been 8 billion of us. Like, the opportunity for that one smart person to move the delta of humanity in a bigger way than any other human has ever is like obviously now. It's like we're all connected with the internet. There's so much technology out there. Like, the world is ready to change. It's ready for the biggest entrepreneur ever. It's ready for the biggest company ever. And I think Elon Musk is the guy. He's the next Steve Jobs. He's the next Vanderbilt. And the ability to like get involved in his enterprises before they totally go all the way. Like, this is just it's almost like a blessing that we're even alive and get to witness this opportunity. And so that's really how I look at it. And I'm like, honestly sad in my career that like, I'm like, damn, like this might be the best guy I ever get to invest in my whole life. And I got 50 years left and I might never see another Elon. And he's still 48 with a decade left in his prime to fucking change the world. And that, I think, is the intrinsic premium of Tesla. Is it that they can recruit the best engineers in the world? Or is it that Elon Musk has got 10 more ideas up his sleeve about how to change 10 more industries? And that is hundreds of billions or trillions of dollars of market cap that is going to flow right into his companies. And the one where he has the most equity is Tesla and SpaceX. And those are the companies that are literally call options, like I said on the Tesla Geek show, a call option on the smartest inventor in the world. Is Elon Musk going to come out with an electric cargo ship that has deployable solar panels that moves all the goods across the world without polluting fossil fuels? I fucking hope so, and I bet Tesla's going to make a shitload when he does. Are we going to go electric with airplanes? I hope Elon has enough time to get to that. And if he does, it's probably going under Tesla too. Like, these are, it's that's one of my favorite quotes, honestly, is like, the greatest asset or liability a company has is not on its balance sheet, it's who's in the boardroom, it's who's the CEO. That's going to change everything. And I have this saying that I say a lot of times, like, what about key man? Like, Elon dies, what's going to happen, Gally? Like, isn't it the risk that if Elon leaves, your company could crumble? And I'm like, I will never invest in a company where there is not a key man clause. If your CEO can leave and your business is still running, you are not going to change the world. And so in many ways, when it's like, what have I learned about all this and analyzing Tesla and investing in it? It's if you could go back and the one trait you could look back at was like the CEO who is going to... Anyway, I lost my point on that rant. But ending my last point, it would be like, I almost think as you can get lost in the sauce of Tesla's value appreciation and the stock price as this story, when the real story is what the business has built that is dictating that rise in stock price. Like, that is the real miracle, is what Tesla's done from a business level. The stock price is just a symptom of that business miracle. And that is why the stock, nobody gets it, because nobody is willing to realize and accept and give Elon the cred for the business miracle that he has pulled off. And that's why they can't rationalize the equity price miracle that has followed. But that is truly, to me, why this all makes sense and is perfectly in line. And I'm not selling a single share because the miracle has been pulled off, and this is a multi-trillion-dollar miracle. And maybe the stock price draws down 50% from here, but I'm not going to pretend like I'm going to be a smart ass and pick up pennies in front of a steamroller. Like, I want to hold this and be an owner and see it all the way out. And I think in the long run, that super, super, super discipline, at least for me personally, is how I'm most comfortable investing. I think everybody's got to figure out their own way, their own stilo. But that to me is really what I thought of is like, buy and hold, the stock goes up. That's great. The day that I'm most excited, the day that I'm happiest is the day that Tesla's down in the shitter when it has the biggest drawdown from its intrinsic value ever. And it's at 180 and I'm on a road trip with Jakler and I fucking, make some moves, Venmo to Cash App, put every single spare dollar I have into Tesla. Those are the smartest moves. Those are the days that make me the most excited, is when Tesla goes as far, as many standard deviations from rationally accepted by the stock market below its intrinsic valuation, not above. And so that's why it's like, okay, Gally, maybe you haven't made enough videos, Tesla's going up, you haven't gotten pumped enough, because I don't give a shit about that. From an equity perspective, I get pumped when the stock price is low. And the thing that actually makes me more excited is not the stock price at all, it's what the hell's going on with Tesla and their technology and their battery production ramp.
Think about another company where people are getting stoked on them building factories. I literally can't think of one.
Right.
Like, is there another company where there's a drone team just following the progress of a factory being built?
All right, I'm wrapping it up. I hope y'all enjoyed this podcast. Little different style. Kind of wanted to just do some free flowing, basically live stream, but my live streams haven't been working, so wanted to make it crispy. But I think my biggest, takeaway and end of the podcast thought is, what makes you pump? What makes you excited about Tesla? For me, it's not the stock price up. It's that the business is succeeding. It's that the world is changing. It's that product roadmap and their business model is actually working and actually succeeding. And business milestones are what we should be excited about, not stock price or equity milestones. I think that's super, super important. And the more disciplined you can stay, the better investor you'll be. And stocks do not go up in a straight line. There was 5 years where Tesla stock didn't do shit and I thought it should be soaring. And so I just think it's super important, like a Jeff Bezos, as much as we hate him on the Elon, podcast, but he has this like philosophy of like, if you're an employee of Amazon, you better not be getting hyped when the stock goes up, because otherwise you should just be getting just as sad when it goes down. And I think it's the same thing about Tesla. Like, you really want to make sure you're doing all the homework, you're analyzing this company, you can come up with a valuation price in your head that is regardless of the equity price, and trade and invest based on that. I think that's super important. Is what would Elon want you to do? Stick to those first principles, and when you're analyzing a stock, that's those SEC filings. All right, that's it. All right, wrapping it up. Please let me know what you think of all this in the comments below. What did I cover or what did I not cover that I should have? Please let me know, make more videos. Anyway, this is Hyperchange. Huge shout out to Jay Filchi. Thank you, Jay Filchi, for coming in with the questions. Give him a follow on Twitter if you're feeling friendly. Thank you to our Patreon supporters, producers. Hyperchange Biz, the Hyperchange Biz Dev team has been grinding around the clock. We've got some crazy stuff in the works, so stay tuned. Subscribe if you haven't already. We'll see y'all next time.